Hello and welcome. Is China back open for business? Well, that's one of the key questions we're focused on right now. And there are really two answers. On one hand, China is reopening. After 3 years, the government has decided to relax its zero-COVID policy that's been so damaging for both the domestic and export economy in 2022. And it's now moving into a transitional phase. It's already lifted restrictions on transport workers, which will help reopen freight channels across the country. COVID cases, though, are rising rapidly, and so the government is trying to roll out a booster program to avoid widespread deaths. At the same time, Chinese political leaders are preparing their economic agenda for next year, which analysts think will include support measures that prioritize both the growth and the stability of the domestic economy. They want to help it through this transitional phase, focusing on consumer demand and the property sector in particular. Property is a really important source of economic growth in China, but it's been in the doldrums since the collapse of the large property developer Evergrande last year. On the other hand, China is also opening up. It wants more foreign investment. At recent political gatherings, leaders have made it clear that China is seeking international investment in key sectors like technology. And after the latest National Congress, government departments also released a notice inviting foreign investment in manufacturing. So what does all of this mean for investors? Well, we think after several false dawns, this time the relaxation of COVID restrictions is here to stay. That doesn't mean the path will be smooth through this transition, but it is a positive driver for domestic Chinese growth through consumption and a positive for global economic growth. After all, China is the world's second largest economy. This year, of course, it's underperformed, and this weakness has had a global impact. But if the Chinese government does manage to coordinate this economic resurgence, stronger growth would support the broader Asia-Pacific region and the global economy. It should also continue to relieve some pressure in supply chains too, but increased demand in China, of course, may drive up prices in markets such as commodities. So what's our view here at Nutmeg? Well, analysts broadly are becoming much more optimistic about the prospects for Chinese growth in 2023. We've seen upgrades to the outlook for growth, predicting a rebound in the spring, and we agree with those. We think that the reopening of China's domestic economy after nearly 3 years of restrictions could be a positive driver for Chinese and global growth, even if the near-term transition is going to be challenging. Thanks for watching. We'll be back next year. And in the meantime, we wish you and your families a very happy festive period.